Hey, what's up? Welcome to DGen Ed. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts, taking requests, like the request behind me, which is of MicroCloud Hologram Incorporated, ticker symbol HOLO. Got this request in a comment on the post I put on the channel, seeing what you guys wanted me to produce tonight. Did get out a video on AMC and GameStop levels. Hopefully that's helpful. Also got a video out on Neo, one of my favorites. And yeah, now just doing a kind of on the fly ticker request live. If you have any requests for me, happy to add them to the list on the left. And yeah, so I probably won't be doing this for too long, probably less than an hour. But yeah, it's just been a fun week, so I thought I'd do this. Lots of energy, so why not? But yeah, I'm just going to dive into... Oh man, I just realized I'm doing this live stream. I'm going to have to add timestamps to it. That always takes time. I'll try to get that done shortly after. But anyways, getting into the chart. And I should note, I'm probably going to also do a ticker request live for Power Hour on Friday, so make sure you join that. Sorry, I just cleared my throat into the mic. I don't know what it is. I'm just like dehydrated all the time or something. But anyways, Power Hour Friday. I think that we're going to see a lot of pretty exciting stuff, a lot of crazy price action, closing above key levels. So I'm excited about that. And then also the normal ticker request live Sundays, 9 p.m. Eastern. So make sure you tune in for that. Always lots of fun. And I don't have to work on Monday, so should be a lot more fun than normal. But yeah, anyways, looking at HOLO, did close on the day at $2.18, down about 32.5%. And the prior day, as we've seen with a lot of stocks, pretty big high going up to $3.90, and then seeing this pullback. And so what do I see with this one? So I don't really know too much about the company. I have done some charting on it for Ticker Request Live. And actually, pretty cool. I'm not sure when I did this retracement, but that did kind of, almost perfectly. I mean, really, both of these retracements. Sorry, excuse me. Hey, Lakshay. Can I look over Apply Digital? Yeah, and actually, that's been on kind of my to-do list. I keep track of all of the videos that kind of perform well, and Applied Digital was one of them. So I do need to do an updated video, so I appreciate the request because that might give me some ideas for the next video. So I appreciate that. But yeah, I'm just going to go over this holograph chart, hologram, and then I'll get on to Applied Digital. But yeah, so I just did these retracements over here. I guess this low, $1.45. We did hit a low pretty close to that. And then also this 1618 coming down to $1.88. So the low before the run-up was $1.56. So really right in between those two levels. Really just like had, let's see, 5 days opportunity to get below, $1.81 before this run-up. And that would have yielded, let's see, if sold at the top, that's 100% swing right there. So that's pretty nice. So I would look for, if it does pull back more, I would look for it to hold $1.88, as that does seem like it was kind of, an important level. But let's see, maybe having it like this. So this, all this consolidation here, that does seem like it was pretty notable resistance, although we did get a close above it. Not enough with that one close. So yeah, I mean, there's this little volume shelf there that corresponds with right around $1.88, maybe just $1.90, think of it like that. So I would look for it to pull back and hold that level. And let's see, is there anything else? Well, yes, I mean, because we have this big, whenever you get a big volatile move and you start to see a retrace, you can always do a Fibonacci retracement to get an idea of some of those levels. And I'm gonna add the levels in before I draw it. I just think it's a little bit more dramatic, a little more exciting to see all of them. So I'm just gonna delete that one, draw it from the bottom to the top. So the bottom here is $1.56, top being $3.90. Let's see if I can get that lined up just right. It's not really necessary to get these lined up just right because they're just approximate levels. I just like to just because, why not? And so, yeah, I mean, we did wick down today to the 786. So following a big move, how could you know that was going to be the top? But from this, it does look like it may have pulled back to support, closing above the 786 at a price of $2.06.1. So right around there. Also, kind of corresponding with the close from the 13th before the really big move up. It actually went up over 17% on that day, the close being $2 a share. So I think really, like the range between maybe $2 and $2.10, look for that to hold as support. If it does break lower, I would say like 190. And if 190 doesn't hold, maybe you could then think of the next level down, the high and the open from the 10th. That was $1.76. But then beyond that, I think it might be going down to, right around $1.50. But so far, right now, it is respecting the 786. So $2.06, that is a key level. You see it close at $2.06. That is testing it, looking kind of dangerous, but you're not seeing confirmation below it at that point. But a close at 206 is technically below the line. And then so another close lower than that would suggest further downside. So, so far, it does look like it has retraced to an important level. So not looking so bad. Could be a dip buying opportunity, but of course there's 190 and 175 to the downside. Hey, more money. KARRAT token, 50x token. Okay, I'll look at that in TradingView. I'll flip over to that. But first, I am going to go over Applied Digital since it was requested first. And wow, cool. I can't remember the last time I did a video on Aquesttive. But I imagine, I always talk about the lines I have up here, and Applied Digital is really one of most of the stocks that I talk about, I really only talk about for videos, and so I tend to leave the lines up. There are just a handful that I might adjust myself throughout the weeks. But so $2.51 did get a dip below that to $2.36. Great dip buying opportunity, and then kind of, break above that level and kind of a pullback and retest as support. And then now above $3.50 at $3.80. And actually, this looks like it's performing pretty well because, I feel like a lot of stocks had pullbacks today, whereas this one actually went up 6%, closing higher than the previous day's high, as well as the high from Monday. So I think it's just, not only putting in new highs, Monday had this big wick up but rejected from 350, and then Tuesday really get like a spinning top or doji here, showing some like indecision with the big wicks to the upside and the downside, but then closing above 350 but not being able to close above Monday's high, which was $3.69, getting a high yesterday of $3.76. So good that it's getting in higher highs, but not being able to get a close higher than that high. The buyers aren't really, committed at these higher prices, but you're starting to see that today, that there's a lot of strength in it as price has been going up, really like over the course of this week. Friday of last week, volume was up and it was came down a little bit. But so for this week so far, we've just been seeing volume steadily increase while price not only is increasing, but also getting higher closes. So I think that's looking really good. But what could be really nice is if it does pull back to 350 to test that and then confirm that as support, basically just testing it. And then that would be, showing that there's consolidation there. It's acting as support. And if I throw up the volume profile, let's see. A little bit of a volume shelf there, but really it's just more pronounced because of this consolidation down here, coming down to a price of right around $3 a share. But I think that, I feel pretty good about it holding 350. And from this, we can do, I'm going to actually delete some of these lines because I don't think they're terribly useful at this point. I think I'll leave what I have up there, but I'm going to do a retracement from the top here to the bottom here and see if this looks like we're getting to and holding above the 236 would be my guess. And so that's really just like the first level of a series of levels. And so actually I'm going to try to get that just right to the penny. So 865. Actually, I can't do it because of that other retracement. I'll have to adjust that a tiny bit if I want it to be to the penny. But then down here, 236. Since that one's to the penny, I'm going to adjust the top one to the penny as well, because I got problems and I'm all right with it. All right, so 236, it's actually below the 236. I'm going to remove the volume profile because we don't really need that. So the 236 is at 384.4. So I think it'd be really good if it can get another higher close. I think that'd be great, especially if it's above 384. If it's at 385 or higher, that would be suggesting that, it's reclaiming this level now as support. Although because of this consolidation over here, actually, I'm going to throw up that volume profile again. Yeah, it is getting into this consolidation, this volume profile, this shelf here. And so maybe it would be getting rejected around 420. But then if it could pull back, maybe hold $4 as support, I could see that happening. But if it does wick a little bit below 385, that could be a level of support. And then the 382, excuse me, is at a price of $4.76, pretty similar to the yellow line at 486, and the 786 from this retracement at 461.8. So really like 460 to 480, 490. I would think that's probably going to actually be some resistance, maybe get some wicks above there, but rejections. And then once it can finally break above, that might be serving as some support following that. But yeah, just getting closes above 350, I don't know what it is. I think because we whole numbers, halves, 50 cents, we tend to think of in those numbers. So getting a close not at, but above that level. And yesterday's close at 358, I think it's looking really strong. So, and also, let's see. Yeah, I'm not seeing any divergence. I guess one thing that might be of concern though, is that here we do have, this peak here that's notably higher than the current price, but RSI is getting pretty high. So RSI is currently at 64.49, whereas when price was at 865, the RSI was at 73.53. And so if price is getting up to, let's say, $5 a share and the RSI is above 75, 74, that would then be bearish divergence or hidden bearish divergence, because you'd have a lower high in the stock price, whereas you'd then be breaking into a higher high in the RSI. So that's hidden bearish divergence. So that could be suggesting that there would be a turnaround. So I'd really be keeping an eye on the RSI, the daily RSI. If that gets above 74, that could be a topping time. So keep a lookout for that. But yeah, thanks for the request. Cool to go over it. And so then I will go over KARRAT as well. And let's see, I'm just going to switch over to my web browser and get over to TradingView. It's going to be the natural gas chart. And actually, before I get into that, I'm just going to take a look at this. I'm kind of hoping that it's topping. I did buy one share of cold. But if it continues higher, that'd be kind of funny, because it's like I've been long natural gas, this whole time. And then now that it's breaking out, I'm like, But, with natural gas, I feel like pretty risky, so I'm cool to wait. I think it would be nice to see it either pull back to this uptrend. Maybe that would be like a first level to start maybe a quarter of a position. This one, maybe add another quarter. And then if it does retest this downtrend, so it's kind of like, breakout from that will be a return or retrace to the scene of the crime. That could be a great dip buying opportunity, with UNG or something like that. But for the time being, I've got my 1 share of cold. I'm probably not going to sell it until I make a little bit of money on it if I do. But anyways, enough of that. I am going to look at KARRAT USD, United States dollars from Coinbase. Whoa, this one just got released. You said it's 50x token. So let's see. I need to... What platforms could this be traded on? I imagine Coinbase, but would it have to be like Coinbase Wallet? So yesterday, the price went up 28%, 28.5%. Today, 3.44%. And yes, I will go over AMC and GameStop. I did just put out a video on them, but happy to kind of casually chat about them. Great, Lakshay, I'm glad that was helpful for you. And I will be putting out a video on Applied Digital pretty soon. I need to. I always try to get different stocks into the rotation. NEO always just happens to be a pretty good performer. It's also one that I hold, so I do enjoy putting out content on that. And inverse head and shoulders are just really cool patterns. So I'd recommend that video if you haven't seen any of my coverage of NEO. I think it looks pretty compelling. But anyways, KARRAT USD, pretty new. It's kind of tough to know what to do with this, but let's see. Got all these wicks up here. Current price is 59.74 cents. And I'm just going to pull it up on my phone in Coinbase to see if this can be traded on the regular app. I think I do have the wallet, but I usually just use their regular app. I don't like the fees that they have and stuff. And so, yep, it's buyable on the regular Coinbase app. And yeah, all of crypto right now is rallying a bunch. And actually, I don't know why. I think I need to look back. This is the daily chart. Yeah, because I have it that all of the history. Okay, maybe I'm looking at the chart. And yeah, it's because it only goes back like a month. I was looking at the line chart on Coinbase, so I was a little confused. It looked a little more complete, but it's just smoothed over. So let's see. I guess some things that we might want to look out for. I'm just going to do array. Okay, I like rays. So yeah, I mean, it looks like it's breaking out because you don't have any opens or closes above this trend line. But, you know, with this breakout, though, it could pull back to it to retest it. But yeah, I mean, I don't know too much about it. And so I don't know. And so I'm just going to Mark 7. Just watched your video on AMC and GameStop. It was very informative and great video. I'm glad it was helpful. I feel like a lot of, like, whether it's AMC, GameStop, any of the, like, you know, meme stocks, I feel like just over the past few years, they've just bled so much. People have really lost, I don't know, faith in technical analysis, stuff like that, because it just goes down. But now that we saw the big move, I think there's a lot more we can take out from the chart. And there are also a number of other people too that do similar technical analysis. Like I don't watch his videos because they're a little bit longer format that I tend to watch. But Colin Gladwell, I forget. I follow him on Twitter. But he is very blunt, straightforward, but a really good technical analyst, I feel. So I think that he'd also offer some good insight. But he also is probably, I'd say, more neutral, whereas I probably have more of a long bias. I'm a believer, you know. And hey, Ben, how's it going? But yeah, so as far as KARRAT goes, there's not enough like history in the chart for me to say much other than it does look like it has broken out from this downtrend. And let's see, if I get a measurement from like the low here, I think more money is suggesting this could go up 50x. And so even just to get to the high, that's doubling. Let's see, that's more than doubling. That's is that tripling? Almost 200%. And yeah, so definitely seems like there's a lot of upside there, but I'm not familiar enough with it to note anything. But really, just like all of crypto right now, I think is just breaking out. So I might flip over to Bitcoin, and I'll do that also with Coinbase. But yeah, broken out to yeah. So I mean, you could do a similar thing, draw kind of. You could do an approximate downtrend. Let's see, from highs over here. Maybe that's, got a fake out break. You could view it like that, or you could, I didn't mean to move the whole thing, or you could view it like this. But either way, there is a break. And yeah, I mean, I think that for me, I'm not really doing too much trading of crypto. I mainly just buy and hold. So I do like weekly buys of Bitcoin and a daily buys, smaller though, of mainly Doge and Ethereum Classic, because they're easy to move, and I feel like I have a plan with them for the upside. But yeah, with Bitcoin, I think that, I mean, I'm always just surprised by it. So I could see it taking out the highs, but I could also see it coming down to like 52, basically around this support level. That's what Gareth Soloway talks about, that he sees it coming down to 52 to like 49, I think is what the range he was saying. But at the same time, though, he had suggested Bitcoin would be coming down to 12K. And actually, I was waiting for it to hit that price, and it never did. So you got to take all analysis with a grain of salt, because the pullback to 52 might have just been the pullback to 56, and that's getting into the 50s. That's the bottom before it goes higher. So we'll have to see. But yeah, I mean, I think that this is such a great long-term hold. I'm very compelled by it. And so what do I think about Shiba Inu? So for me, I have a number of coins. I'm using Robinhood. I just do like daily dollar buys, and I had been doing that with SHIB, but I just stopped it because I was a little bit in the green, and I felt like I was doing it too much with too many different coins, and I had trimmed SHIB enough that my $1 additions weren't really that notable, whereas my other positions had accumulated to be worth like $50. So I was just going to swing those if they do go up, or just continue to do dollar additions. But yeah, I mean, I think that SHIB's been around since like the last cycle. And so I think, these meme coins, if it's hopefully not insulting to call it that, I feel like Doge is the same way. For me, I'm very compelled by Doge. I think really also, it's fun. I feel like SHIB is kind of on the coattails of Doge, although my understanding is it has kind of created its own niche. But Elon Musk backing Doge, that is what really compels me to have conviction in that one, and also just $1 seeming like a pretty feasible price target. But yeah, with SHIB, I mean, I think that this could be coming back to, I guess here, this is my thought process with SHIB versus Doge, and I'll go over the Doge chart in a minute too. But so like I could see it definitely coming up to here because we have all of these wicks here. And so that would be a measurement, a measured move, or not just a measurement, about 45% gain. And so that's pretty nice. It could also, though, let's see, be going up to, let's see, the all-time highs. That would be around an 82% swing. And so that's pretty good. But so we're talking about getting back to the all-time highs of 82%. And so if I do compare that with Doge, let's see here. I'm just going to do the Coinbase so it's all comparable. And it's quite possible an ad will be popping up in a minute. Did you guys see? Oh, you didn't see it. I'm going to remove myself for a second just 1 second. All right, so this is pretty cool. I think you guys will like this. I'm going to disappear for a second. You'll still be able to hear me. But so I'm gone. I'm going to type in Doge here, and click on the Coinbase one and see what happens. Let's see, maybe I need to go to SHIB first. Okay, I'm in Shiba Inu. Now I'm going to switch over to Doge. There was a little Doge guy that came over here and was dancing. I'm sorry I was hiding it. Maybe I just need to refresh this page. Ah, yes. Okay, so now I will switch over to Doge. Maybe I need to clear my cookies or something. Yeah, it's too bad. There was a little dancing Doge in the corner. So yeah, you guys should check it out on. It's pretty funny. But anyways, I'll just pop up. He popped up right behind me. But yeah, so I'm talking about Doge in comparison with Shiba Inu, and so if I just take a measurement to the all-time highs, which I need to take a step back. Actually, I'm a jerk. I don't know what I was talking about. I need to probably take a step back further. But so this is. Why doesn't this go to 70 cents? It should go to 70 cents. Maybe I want to look at this on Binance. Yes, this is better. So yeah, 75 cents. And so from the lows, I'm going to do the same thing with Shiba Inu because I guess I screwed it up before. But so from current price up to 70 cents, that's 75 cents. That's almost, a 400% move to the upside from current price. And then if I look up SHIB, and I'm going to do it also from Binance, I guess. And so going back to the all-time highs, let's see that measurement. That is 256. So I feel like with that being said, I am more compelled by Doge as far as the meme dog coins go that have been around a little bit, 4 years or so. That I just think that there's more upside potential than with Doge than there is with SHIB. But yeah, I'm going to check out your follow-up comment, Mark, and hey WS, how's it going? I did go over HOLO at the beginning of this stream. I can go over it again if you did miss that. And so Mark's saying they are definitely meme coins and meme stocks, LOL. At the end of the day, I'm in them to make money. I'm not married to either the stocks or coins. Cool, yeah, it's good to, I feel like, that's the funny thing about it though, when you make a lot of money with it, when it goes up, you get attached. But yeah, I really just, my stance is I feel very strongly about Bitcoin, but I don't think I'm necessarily going to make a lot of cash with it. But I think that I will make, basically think about it as retirement, just to be setting money aside that will expand over time, and I'll be happy about that. But Doge and Ethereum Classic, I just find them to be very easy to move. I have a Trezor wallet, and I can't have tons of coins on it, but those are two that I can. And they move from the exchange within minutes, sometimes within seconds, to my wallet. And it's very cheap to move them, so I like that as well. SHIB, I think because it's built on Ethereum, if I'm not mistaken, it is a little bit more of a pain to move, but also just like I've shown, the upside for SHIB just to the all-time highs, which I think these will surpass. I think SHIB has an upside potential of 250% in that sense, whereas Doge is about 400%. So I just think that the risk to reward, is like the risk is much more appealing with Doge because I think the reward's much better. So yeah, those are my thoughts on them, and I'm actually gonna, since I did just put out the video on AMC and GameStop, I'll go over HOLO first, but then I can do just kind of a casual chat about AMC. And so, yeah, just going over the chart here, what I was talking about is really, I mean, you probably I imagine you were the one who requested HOLO before, and that's why I have these retracements. But really, just like the floor that was over here before the big run-up, $1.45. And then from this retracement, I didn't draw these in the stream. They were already on the chart. The 1618 extension from that is right around $1.88. And, I'm not sure when I drew that retracement, but it was seems like a pretty good bottom predictor. Had 5 days testing and or below that level. And so I think that looks pretty compelling. What I see, I did this retracement from this stream is, going from the low of $1.56 to the high of $3.90. The 786 looks like it's respected as support at $2.06.1, so right around really like $2 to $2.10. The close from the 13th, so that was Monday, was at $2. And so, yeah, I feel like that range, $2 to $2.10, could potentially be acting as support. If that breaks, though, I think like 275, corresponding with the high from the 10th, so last Friday. But if that doesn't hold, I could see it coming down to like 250 cent range, 150 to 160. If I was saying twos, I meant 175 for here or 188. And so so I guess I missed that on the way down here. I glossed over the 1618 extension here, 188. So I feel like if it doesn't hold $2, I think like 190 is the next level, then 175. And if not that, then I think it's retesting these lows. But you said that your average is at 250 and small position in AMC at 7, both underwater. Could be afraid. Should I be afraid? So I think as far as AMC goes, because I'm not really that familiar with HOLO, as far as AMC goes, I'll go over that in just a second. But with this one, I think that whenever you see a big run up like this, it's good that it didn't pull back down to where it was before. And, given that, big move up and a close up here, that was still a very green day. It's up 61% on that day, even though it's red just because it opened higher, closed lower. But for today, it's still closed above. Let's see. The close was 218. What was the high on the 13th? 217. So even though it was like a pretty red day, down over 30%, it closed higher than Monday's high. So I'd really just keep an eye on 218, 217. But I do think it could be dipping lower. But I think that there could be more rallies to come. If this did move kind of in concert with AMC and GameStop, I'm not sure if the connection there, but I could see it rallying again. But you said 250. The 618 is at 245, so maybe it'd be that. That would be the next level for it to claim. So if it's able to hold, not get any closes below 206. Then the next level up is 245, and that's where you'd start to get green. So I think I don't think all hope is lost by any means, but it might pull back a little bit more. But so hopefully that was helpful. I did go over it a little bit more extent at the beginning of the stream, but I didn't point out the 217 high from the 13th, so I think that's an important level. But then, I'm just going to switch over to AMC. And so with this, so for me, I'll tell you what I've been doing. I've been trying to accumulate, but very slowly. Basically, I'd buy at least one share a week, throughout this whole time of it just bleeding. And that's gotten my average down a little bit, but I have a bunch of shares. I think my average is around 1150 or 1175. So, I was basically green for a little bit yesterday. But actually, I think that I was still probably red because after buying more after the pullback, now I would have been in the green. And so my thought process has really been, I like selling covered calls And so wait, yes. Uh, and so yes, awesome. I'm just gonna type up because I can't see the rest of what you said in that WS. Yes, awesome. If you zoom out, it ran like crazy. If you're talking about AMC or HOLO, but as far as AMC goes, looking here, I feel like so for me, like I was mentioning, I sell covered calls, and last week, so I have two accounts, Webull, which is where I do most of my trading. I also have some an account in Robinhood. So before I get on with AMC, I'll switch over to HOLO, so I'm not gonna. Oh, if I zoom out, like you mean that like these runs in the past? Let's see. And what's the I might switch over to the. So yeah, it got even higher in the I guess that would be the pre-market 422. But yeah, I mean, this could be like if we're, let's see, these runs in the past. I mean, because these, yeah, I mean, this one here, I'm just going to remove the drawings. You know, you see this big move up and then pull back, and people are panicking at this time. And that's the exact time you want to be buying. And then it goes for another run. And I feel like big moves like this, whether they're squeezes or just, good company news, whatever, I feel like they're like Jedi. They tend to, come in twos, no more, no less. And so there usually, I think, tends to be like multiple peaks. And so I think what we're seeing in AMC GameStop, I think this is really just the beginning, and it could be more than just, yeah, I mean, like here you see this big run up, then another spike here and another spike. So, more than just one at least. So I think that I wouldn't be too worried at 250 as long as it's not a huge position. But I think that it could definitely be retesting 4 or so. But yeah, I'm going to switch over to AMC. And so what I was saying about covered calls is a couple weeks ago. So I been selling covered calls at strikes that I did not think would be getting hit. And for AMC, the strikes, the highest strike in the options table, if I flip over to that, you can't see the options button up here, but I'm in the options table now. So for the highest strike for AMC on Monday, the highest strike was $8 a share. That's down here. But then on Tuesday, the highest strike was $12.50. And now the highest strike is $22 because of all of this volatility to the upside. I imagine it will stay $22 for the remainder of this week. And so, the reason why I had sold some covered calls at $8 a share is because that was the maximum. I didn't think it'd be hit. And so this week, my thesis is that, oh crap, I don't want to get rid of my shares at $8 a share if it does close above $8. So I've been adding more below 8. And I, yesterday and into today, was a little nervous with it being up here that, oh crap, it's going to be closing the week above 8. I'm going to have to sell those shares. They'll be assigned, and I don't want to get rid of them. So I want to get as many shares as I can while it's below 8. And so I was doing that yesterday, but I was looking at the chart and thinking, well, I think it's going to pull back to maybe $6 a share, maybe $5, maybe retest these levels. And that's really like the dip buying prices that I should be waiting for, but I'm just antsy. I don't want to get rid of my shares at $8 a share. So I, was accumulating a little bit more in this range. And, now I feel like that we have come back to potentially arrive at support, whether it's this white downtrend, which is the part of this channel, which I don't really think is that significant, but it's just been kind of, a little bit of a guide in this time that we've been bleeding down. We have respected its somewhat resistance to the top, but then breaks above, and, a little bit of support over here. So maybe it is significant, that channel. And we did pull back to that today. Maybe we come back lower to the purple downtrend because that, as you can see over here, I'm actually going to adjust this a little bit more. These two pivot points, those were hit, and then we have not tested them again until just now, and we've broken above them. So if we're able to come back to that level and test it as support, that is a retrace to the scene of the crime, and that is, when you want to be scooping up those shares, because rather than starting from a floor of $2.38 or really, like $3 a share right before this big run up, right around $3 a share, we'd potentially be looking at a floor of, $4.20 or $5 a share. Maybe where we're at right now, the close at $5.50. This could be the bottom before the next rally, and I could see $11, $12 acting as support on the next run up, breaking above it and then pulling back to that level as support. And then, continuing higher, like to fill this gap up to here, $43, or maybe get rejected around the lows here at 35. So do I think that 750 is, risky or something to be concerned with? No, but, like I said, my average is 1150. So I have a bias in that sense. But I should also note that my average in Webull is around 1150. My average in Robinhood is about 8. But I'm fine to get rid of those shares around 8 because I just don't want to have my money in Robinhood. And so, with that being said, I think 750 is fine. And I think that, if you didn't go in as heavy as you initially wanted to, or you would feel comfortable with adding, I think that you're in a position where you can be dip buying and getting your average lower. Whereas if you had bought at $3 a share and that was your average, I'd think that, you'd only be doing yourself a disservice by buying more shares on this dip, because you'd just be getting your average closer to a price that might be hit again. $3 a share, I don't think it's hitting that level again. I think that we're going to find support, worst case scenario, around $4 or $4.20, $4.30. Maybe, we get a wick down below this purple downtrend, but then closes above at around $4.20 or $4.30. And I think that this is just the beginning. And I should note, I'm going to go back to look at the previous, rallies that we saw. This was, I remember this day so well. When this, squeezed up, had no idea what to do, buy button removed, crazy times. And this was a big move, volatile pullback. There was a second attempt to get higher. And so I think that might happen maybe this week with AMC, with GameStop, but then there could be a pullback. And I think that during that pullback, that would just be like over here. Great time to be accumulating more shares before the next run up. And maybe that run up is short-lived and doesn't get as high as the high that we saw yesterday. But still, I think that on pullbacks, it's just going to be great opportunities to accumulate more before another potential run up. And I should also note, though, while I'm referring to AMC with this, GameStop was a little bit different. It had the big run up in January, but then pullback. But these pullbacks were good opportunities to accumulate. While this did not get as high as the prior high, still a great run up. So from the lows here to the highs here, almost 700% up to the highs here. So, a little bit lower, but 600 to 700%. So I think that the pullbacks that we're seeing now with AMC, with GameStop, that's right here. And I could actually pull it up and maybe we could watch it. But in one of Roaring Kitty's tweets that he's put out, meme videos, he mentioned that over the course of 20 days, I believe, referring to Shawshank Redemption and Andy digging out over, I think, 600 days. He was talking about GameStop, I believe, over the course of 20 days. So maybe we could say from this point here, or maybe if we just actually take a measurement going back. So from I want to do it. I might just take a measurement from the high here back 20 days. Yeah, so I don't know if it's 20 days or 20 trading days. So 20 bars would be coming back to here. I don't know how significant that is, but really just like from the move up to here from that low, let's just do that. That's 15 days, so that is less than 20. So going from that low up to the, let's see, that's 2,200% over the course of like 15 days. And so, and with that, we did see, you know, a big run up, 650%, and then a pullback, but then a rally that continued. So this pullback that we saw today, that might be it. You know, it might continue up. And as far as like the options go and stuff, GameStop's looking better than AMC as far as max pain goes. But if I do, you know, this, I covered this in the video that I just put out, but the GameStop max pain for this Friday, and this gets updated every day. So as price goes higher, as more people buy and sell options, this is going to change this number. But for this week, it's $18 a share. Current price, $40. And so if the max pain goes up a little bit, but price stays around the same, that's going to be triggering potentially another gamma squeeze. That's what I feel like what we've seen. And I think that's just kind of a cascading effect. And, you know, I feel like the rallies just started as far as rallying the troops goes. And I think that there's just so much more upside. And let's see. So with GameStop, max pain is $18 a share. If I do, you know, just get back to current price action, I feel like I have to adjust this. This close, that was on Friday, May 3rd, getting a close at $16.47. The max pain for that day was $11 a share. And so I feel like that close on that Friday set all of these stocks up for the rallies that we've seen, because it was basically just like, okay, you know, people might be exercising their call options that closed in the money, or, you know, if they do, or if they do for the next week, the market makers need to have those shares to provide if people are exercising their options. And so I feel like they just had like a week of preparation before just losing control. And so this consolidation that we saw was a bull flag, and we saw this massive break to the upside. And so if we're getting another close, whether it's just with GameStop, maybe it's with AMC as well, if we're getting another close well above max pain, I think that even if we are seeing, you know, consolidation like above $30 a share or above 24, any of these levels, really, I mean, if we get down to like 18 though, it's kind of like back to these levels, so not as good. But I think we could be seeing consolidation above 30. And if we see that, maybe it consolidates over the course of next week, then I think we could start to see a rally into the following week and start to get closes, multiple closes above $48 a share, potentially getting into triple digits. So I feel like that looks really good for GameStop, with AMC being at a price of $5.48, did pull back a pretty good amount. And I will note that it's possible in 10 seconds an ad will pop up. Apologize about that, but I'll try to not go too crazy moving forward talking about the max pain. So I'll just hold on for a second and just chill. I'm actually going to drink some water, so I'll time that. Got to keep myself hydrated. Hopefully that's not annoying, trying to figure out how to manage ads during live streams and stuff. Actually, I should have skipped it just because there are only a couple of you here. But yeah, anyway, switching over to the max pain here, I do have AMC pulled up for this coming Friday. The max pain is $4 a share. It was previously $3.50 yesterday, and I believe it was $3 on Monday, but it might have been a week before that it was $3 max pain. I actually believe it was $3.50 at the start of the week. But the thing that I find really interesting about AMC, because I am more heavily invested in them, I do follow the options table for selling covered calls and stuff like that. I don't know. I think I did go over this in the stream. Or maybe I recorded two versions of the video and I scrapped the first one. It was too long. But the max pain for AMC, or sorry, not the max pain, the maximum strike for calls for this coming Friday was on Monday, $8 a share, so down here. And then yesterday on Tuesday, it got bumped up to $12.50, and now it's $22 a share. And so I think that's partly because of how volatile it was to the upside, but also I think that's to push the max pain higher, because as more options are available in this price range, this max pain here is going to migrate higher. And so if max pain does get above the price, then that shifts this into the bears' favor rather than the bulls' favor. But if we do get another rally into the close of the week on Friday, I will be streaming Power Hour because I think it's going to be really important. But if we see rallies with AMC, GameStop, and they're closing above max pain, that might be a continuation of the rally into next week, or we see some consolidation as market makers get situated before they lose their shit, and we see another big move to the upside. And with AMC, I think that it could be testing 12 as support and then getting up to fill this gap. I think it would be bumping into some resistance, probably around here, around $30. But I think that there's just a lot of upside for these. And I think this is just the beginning. These moves don't just happen overnight. That's why investing is hard. That's why trading is hard, because you're constantly being tugged in different directions. Thinking, today everybody's thinking, oh man, I should have sold. I should have sold at 11.88 because that was my exit opportunity. Man, I'm just going to cut my losses down here. And then it consolidates for a week and they think, I made the right decision cutting my losses. It's just going to bleed back down to 280. But then a week later, it rallies and closes multiple days above $12. And then those people FOMO back in. Oh, I should have, whatever, all that stuff. So right now is the opportunity when there's blood in the street and, these big red candles. And, basically all of Roaring Kitty's tweets today had the kind of, we're on the red days, the down days. They kind of had that kind of sentiment. And that's all according to plan. This is how it happens. You get big up moves, people FOMO in, then they feel like they made a terrible decision as price hangs out down here, and then it goes up again and they FOMO back in. And so, I think that the next 2 months, I think that's a pretty big opportunity for AMC and GameStop holders. Maybe it doesn't last 2 months, but let's see. I'm just going to follow up on the comments. I hear Marky Mark saying, I hear a lot of people talk about max pain. Can you please explain what max pain means? Yes, and I feel like I should maybe do a video where I draw it out. I don't think it would necessarily be that popular of a video, but max pain is basically, so I don't know how familiar you are with options. I've gotten pretty familiar with them because I sell covered calls. Covered calls are basically like, so a way to, so it's, I don't know if going over the table will be that helpful, but it's like, AMC's price is at $5.50. I want to make a bet that I think it's going to close on Friday at $13 a share. So this strike right here, I'm just pulling that out of thin air. I just gravitated towards 13 for some reason. I'm not saying I think it's going to 13 this Friday. Maybe it is. I have no idea. But let's say I think it's going to 13. But I don't have enough money to buy 100 shares at $5.48, but I want that exposure. And so what I could do is I can say, okay, well, I think it's going to close this Friday at $13 a share. In order to buy an options call, that would cost me $21. So rather than spending $550 buying 100 shares, I could buy one call option for $21 because it's 100 shares. So 21 cents times 100, $21. I buy that, and ideally it closes above $13 a share. Let's say it closes at $22 a share. I can then exercise that call option, and I get 100 shares at that strike of $13 a share. And so that benefits me. But also as we get closer to expiration, if price is well above $13 a share, then this price that I would get for the sell would be much higher. And then I could then sell the call, make some money on that. So that difference. And so right now it's getting pretty close to expiration. This is really risky. The option's so close to expiration this Friday, pretty risky. But then the other thing is that you can sell covered calls. And so I've done that a good amount. And that is like, okay, I have 100 shares of AMC. I don't think it's going to close this Friday above $13 a share. And then so I can sell or loan out my 100 shares for $15. I would get 15 cents times 100 shares, $15. I get to keep that money. And as long as AMC closes below $13 a share, I get those shares back. If it closes above $13 a share on Friday, then I have to sell those shares at $13 a share. It doesn't matter if it's at $22 on Friday. If it does expire in the money, the contract expires in the money, then I have to sell those shares at $13 a share. And so what max pain is if you look at this graph, this is showing the puts are red, the calls are green, and this is saying that if price is closing at $20 a share, these calls, this is all of these people would be in the money. And so that's great. You want to see these bars as high as possible. That means retail is making the most amount of money from this. And so max pain, where we see these bars lowest, that means that whether you're long or short, calls or puts, the most number of people are losing money. So their options are expiring out of the money, which means if I come back to this, I'm referring to $13 a share. If I buy a call with a strike of $13 a share, I want it to close above $13 a share. But if it closes at $12.99, that means I don't get my shares back. That means my call expires worthless. So this $21 would go to zero. And so max pain is whether you're long or short, calls or puts. The most people lose. The people lose the most amount of money, whereas market makers make the most amount of money based on the premium from loaning out shares or selling covered calls or stuff like that. So I don't know if that makes sense. It's kind of complicated to talk about, but really it's just like I'm going to make a bet that the stock price will go up to here. And if it gets to that level, I make money. If it doesn't get to that level, I lose money. And then conversely, I'm going to make a bet that price will come down to a certain level. If it goes down and below that level, I make money. But if it doesn't get to that level, I lose money. So max pain is the happy medium between longs and shorts losing money, but market makers, those who provide the shares, they make the most money. And so it's, and then so max pain, if price closes well above max pain, so for this week, AMC, it's $4 a share. If we close at $8 a share, that means that there are more longs in the money than there are shorts. So it's a bullish sign. And also that market makers then have to provide shares to those who want to exercise their call options. Let's say I buy calls to max pain at $4 a share, and then it closes on Friday at $8 a share. Then that would mean that I could then exercise that call option and get those shares at half price at $4 a share. And so that means that market makers have to buy a bunch of AMC to then provide for anyone exercising their call options. And that then drives the price higher. And so that's what I feel like happened with GameStop a couple weeks ago, because it closed above its max pain of $11 a share, closing at $16.47. I think that was kind of the key, the trigger that caused, what we're seeing. Following that, though, we saw consolidation before it moves to the upside. And so with this pullback, I think this is an opportunity to accumulate more before the next leg up, because while GameStop is around $40 a share or $36 in the after hours, GameStop's max pain for this Friday is $18 a share. Price is double that right now, exactly double that. And so if we're closing, I mean, if what we see here was triggered by price being $5.47 above the max pain, which was $11 a share, so down crazy. Down here, that may have triggered, what we've seen here. And so if we're seeing that again this Friday, and I'm going to be streaming for Power Hour on Friday. If we see that again, I think we're going to see more upside. And if we see consolidation following this week, I think that's just an opportunity to accumulate more before the next leg up like we saw here. So those are my thoughts on it. I'm really excited about it, but I could, of course, be wrong. But I think that I think that what we're seeing is all caused by options. And so I think it's super cool. And so I'm going to catch up on the comments. Sorry, I've been going on this tangent. Hopefully that was helpful. Hopefully it helped you guys understand it. Kind of a complicated thing to explain, but really it's just like, I bet something's going to go up or down. And if I'm wrong, I lose money, market makers make money. And max pain is when the most people are wrong and market makers benefit from that. And so, okay, just going to catch up. So WS says, yeah, my timing could be a lot better. Everybody's timing could be a lot better. Don't worry about it. I mean, that's just how it is. And so need to read the charts better. Appreciate your input. It's not only reading the charts, it's also exercising discipline. So with AMC yesterday, I saw price. I look at the daily, but I can look at the hourly here. I saw price yesterday going well above $8 a share, and I'm just thinking, crap, I want to get as many shares as I can below $8 a share. And so, but looking at the daily chart, I was thinking, yeah, but I mean, there's this gap here that was formed. I could imagine price pulling back down to $6 a share. But I get in my head and I'm like, but maybe it doesn't. Maybe it keeps going higher, and maybe I don't get to pick up more shares below $8 a share. And so I started adding more at 8, at 7.50, at 7. But then I had an order at 6, and that got filled. And it's like, have more confidence in your analysis. I've had orders today filled ranging from, I believe, 7.50. Today the high. No, so I guess. Yeah, it was pre-market, like 7.50 down to, I picked up some shares around $5 today. So kind of that average. So my average picking up shares today was probably around $6. Not a ton. I wish I had more money to, invest more heavily. But I did pick up a good amount of shares at $3 to get my average down, or right around $3, $3.12, I believe. But yeah, I mean, I think that the dips that we're seeing, I mean, really, it's just like, if you feel panic inside, that's telling you don't buy. You got to think, hey, panic, pushing you aside, this is the time to buy. So I'm gonna do that. And I have been streaming for over an hour now. That's crazy. I need to get to bed soon. So I'll catch up on the comments. I see the comment on Blink, so I will address that. Ben asks, what do you think about Blink based on today's price action? So I actually have not looked at it, and I will check that out. I feel like most things have kind of pulled back. So going up, man, Blink is... Okay, so it did pull back. So yeah, I mean, this could be a topping signal in all honesty. And so I say that because yesterday does look good because it closed higher than this high over here. And we did get another close above that. But now what we have is basically 352 is, the level that, like, the majority of the trading yesterday, price opened and closed well below it. And so I feel like that does suggest, I mean, this is an inverted hammer candle or a shooting star, I believe, as you refer to it. There's shooting star and evening star. I get them confused. But one of those. this is a topping signal. This spinning top that we saw today, indecision to the upside and downside. Those wicks are about the same length. So that could be suggesting that, there is still more room to go for it to the upside. What I would do is I would keep an eye on it tomorrow, and ideally getting a close above 352 to suggest it will continue higher. But if it can't get a close above that, if it gets a close below 326, that to me makes me think that the top is in. Also, thinking about this, and I want this to keep going up. I know that you want this to get to $6 a share, but what we see in the price and the RSI, we see here short time frame, but we see a higher high. What do we see in the RSI? Here we see an RSI of 71.5, and up here we see an RSI of 66.89, or today's high, 67.54. So that is higher highs in the price, lower highs in the RSI. That unfortunately is bearish divergence. Maybe it doesn't play out though, but I could see it at least pulling back to fill this gap. That'd be coming down to around 310. But yeah, let's see. We could also take another look, at the highs over here. So this high, RSI was lower than it currently is. So I guess it's good in that sense. Taking a step back, it does look a little bit better, but just shorter time frame, that is bearish divergence. So yeah, I could see this. I could see it pulling back, but I wouldn't necessarily see it pulling back to 255. I think that's off the table at this point. I missed that opportunity, but I can only be involved in so much, so I'm not worried about it. But I could see this pulling back to $3 a share. And maybe, pull up the volume profile. Got this nice volume shelf there at 290, corresponding to the consolidation over here. Maybe it could be pulling back to that. But if you're into this for the long term, I think that a pullback could be short-lived in this, because it's been breaking my expectations that I was thinking it'd go to the downside. It's been breaking to the upside. And so, yeah, if you're going to be phased by a pullback to 290, right around here, then maybe you want to trim a little bit. But if you're if I was holding this and I was in the green right now, I'd take a little bit off the table. I'd trim a little bit, and then I would plan to then buy those back at either $3 or $2.90. But if I was still in the red, I'd chill. I'd just be prepared for, okay, I think I want it to keep going higher, but I think it might pull back to at least $3 a share, or I guess I should say at least $3.10 to fill this gap. Filling that gap would be good for it. And actually, there is this gap here. It doesn't really look like it because there are the wicks. But if you do the gaps based on the closes, which is more proper, you would then have the close here at 260. So there is a gap down to 260. So I guess maybe, like I said, 255 off the table. Maybe it's not off the table. But yeah, if I was holding this and I was in the red, I just say, okay, I'm going to wait to add until it's at least back to $3. Otherwise, I'm just going to chill. Investing's all about waiting. And I think that this has broken out of this pattern that I think it could be getting to at least 470 or so to get back to test these highs. It might just take a couple months. And so let's see. Following up with Ben's comments, max pain and gamma squeeze are two terms to be aware of. Yeah, and we can actually look up gamma squeeze, but I'm pretty sure it's driven by prices closing above max pain. And so let's see, gamma squeeze. What is a gamma squeeze? And also, I think what we need to do is look up Google Trends. And so Google Trends, let's look up gamma squeeze. I'm sure there's a spike in it. I guess not. Oh, over time. What's this time frame? This is the past day. Let's look over the past 5 years. And so there was a spike at the end of January. I guess this is good to be putting into perspective. So January 24th to 30th, that was the maximum search for gamma squeeze when we had the previous squeeze going on. Hey, Nameless, what's up? I got to catch up on some comments, and I got to get to bed soon because I got to be up early. But, you know, if what we're seeing is a gamma squeeze, we're not at peak FOMO yet, you know. So this is just the start. But I think that we will probably want to wait. I'm not sure when this is updated, but maybe a week from now it'd be good to look at this, and this could be a nice indicator for where the top will be. So that's good. But yeah, I'm just going to look up what is a gamma squeeze. And before I really get into that, I'm going to catch up on the comments. Hopefully there aren't annoying ads or something here. And so I'm just going to catch up on the comments. I think HOLO has had quite a few gamma squeezes. I would say so as well, as long as they have options, because that's the one ingredient that is needed for it to be. There are no options. So what was probably occurring was short squeezes with HOLO. And that's why it squeezed up so much like that, because there aren't options. There can't be a gamma squeeze as far as I understand, but we'll read more about that in a second. Just going to catch up on the comments though. Baba, please. I will do Alibaba, but it will be very quick because I got to get to bed. Oh, it makes sense now. Thanks for the very detailed explanation. Glad that was helpful. You commented that about 10 minutes ago, so hopefully I'm glad it was helpful. I keep hearing about the wheel strategy. I don't know what that is, so I'll have to look that up. What is presently the max pain of BLNK? So I'll do that. And very easy to do this. The resource that I use is here. I'll move my window down so you can see it. Well, you can see it right here, maximum-pain.com. And so the way that you look it up directly is maximum-pain.com/options/ and then type your ticker. So I'll just do BLNK here. And so the max pain for this week, and I'm going to make this bigger again. If you just scroll down and it shows you in the chart, max pain for BLNK is $3 a share. And so BLNK is currently above $3 a share, but not by much. So hopefully it can close the week above $3 a share. I'm just going to catch up on these. Nice, Parker. Yes, very nice. And hey, Nameless, glad to see you on weekdays. Appreciate it. I'm just excited by what's going on. I think there's going to be an ad in a second. I apologize. I should skip it, but I missed it. But yeah, let's see. I'm going to take a drink of water while the ad goes. Got to stay hydrated. But yeah, I'm just excited. I'm invigorated by what's going on in the markets, and yeah, just fun to go over different charts. I know everybody's in different things, and this is a nice way to cover a lot of stocks without doing a lot of different videos. Ticker 9. Yes, I'll add that up here. But then I'm just going to look up the definition of gamma squeeze real quick. And am I comfortable shorting at all-time highs? For me, I don't short. I actually don't know how to short. Buying puts. Oh, I mean, if you're curious about shorting, for me, like the way that I short is, like semiconductors with SOXS or SQQQ for the NASDAQ or SH for the S&P 500. I believe I also have a very small position in SPXU, but I didn't. I started adding to that late, so it's smaller. But yeah, I'm comfortable with those ETFs. If I was, would I be comfortable being a short and taking out shorts? No, that's way too much risk for me. I would not do that. That's not my style, and I also don't really like the. I feel like I'm an eternal optimist. I have a really hard time wanting things to go down or be negative. So actually being short something is very tough for me. Yeah. And then let's see. And then the Kamala Dean, sorry if I'm mispronouncing your name. Really appreciate you let's see. I'm just going to type up because there's this little heart emoji that blocks what I see, that I reply to each and every comment. I try really hard. Eventually, the channel hopefully will be so big that I have a tough time doing it. But yeah, I appreciate the comments because that's it's even people who troll me sometimes. I appreciate those comments because it brings more attention to the channel, and I just like the growth and stuff. But I need to get on now that I'm caught up with the comments. I am going to read over what a gamma squeeze is real quick. So what is a gamma squeeze? When stock prices experience a rapid shifts, the conditions may be ripe for a squeeze. In this scenario, investors may find themselves buying or selling shares of stock outside their normal trading pattern in order to minimize losses. A gamma squeeze is an extreme example of this, in which investor buying activity forces a stock's price up, often quite sharply. That's what happened in early June 2021 as shares of AMC experienced dramatic sudden gains. Gamma squeezes are often associated with options trading, and they can be problematic for investors who don't fully understand how they work. And I would say they can be very risky for doing covered calls. I do covered calls. I have been forced out of positions before. I don't like it when that happens, but that's basically when I say, I sell a covered call to a price I don't think that it's going to hit because I want to keep my shares. But then when it closes above that price, I have to let those shares go and I take a loss. And I don't like that. And so I feel like now, especially with the volatility that we've seen, covered calls are very, very risky. So be cautious with them. And also do not hold options to expiration unless you're in the money and you want to exercise them, meaning buy the 100 shares at that strike price. And so very risky. I am not good at buying options because I don't tend to make money doing that. I'm pretty good at selling covered calls, although I could be more aggressive, and I'm not so good when things go volatile to the upside, which is what we're seeing now. So it's very risky to do covered calls. Anyways, I'll finish this last sentence. A financial advisor can provide advice on various investing strategies in your portfolio. And I should note, I am not one of those. I am just another retail trader trying to navigate the markets and the charts because I enjoy navigating them. And I enjoy sharing my thoughts with you guys and appreciating your feedback and your suggestions. And on the note of suggestions, I'm just going to go over these in order that I received them. And so let's see, I know that 9 was requested. And I also got a request for Baba, but let's see, Baba, I believe, was before. Yeah, Baba was before, so I'm going to go over Baba really quick. So earnings just happened. I drew these levels from earnings. Close at, let's see, close today, almost $81. Above this level, it stood out to me as $80.61. You got to take a step back for this. I'm going to remove my drawings. Go on the weekly time frame. I think that this is, all time to accumulate. And so if you're long term, I don't think that there's much to worry about. I think that there's a lot of upside for Alibaba. If you're short term, I think that it could be seeing a pullback. I think I went over in the video, $75. As we get closer to June and it's above $75, I feel like that level migrates up with these uptrends. And so, yeah, around earnings, what was the low here? $79, I believe, around earnings. There was a low of $77.72. I think that it could be coming down. Like I said, maybe it's at $75. But I think that could be a bottom. And then from that, I think there's a lot of upside. So if you're short term or long term, I'd brace for, or be prepared for, I guess I should say, 75. But maybe I'm wrong about that, and maybe it doesn't pull back. So I wouldn't wait for it because it's quite possible what we see here is a bull flag and that break to the upside. Actually, there was more volume traded when it was down. than there was when it was up. So maybe that is kind of, that price comes down between these 2 days. Zoom in so we can see it a little better. Price is up here, and this is the volume. Price goes down, there's more volume. So there are more shares exchanged when price is lower than when price is higher. So that is not necessarily so good. And when you see price going up and volume going up, that means a continuation to the upside. When you see price going down and volume going up, there's a divergence there, and that means that price is more likely to continue down. So I could see, I'm not in it. It's a little bit more pricey than the kind of stocks I like to buy. I could see it pulling back to 75, but long term, taking a step back, removing my drawings, I could see this bumping into resistance around $130 with these lows here, also corresponding with the kind of the tops over here. And so actually you could probably throw out my drawings again. You could probably draw a trend line from the lows over here to the highs. And I could see that, this is just being approximate. I could see that being resistance, which would be right around, 120, that corresponding with the high over here as well. So that's another thing to consider. But, I'm going to switch over to 9 and I'll close the stream out on that just because I got to get to bed because I have work in less than 7 hours. But so, yeah, 9. This looks a little precarious because, yeah, this level here served as support. And that goes back to November. I wonder if there's something that kind of like what I just done. I don't know that this would be, this would be uptrending. So not as useful. I think like maybe something from this to, I feel like maybe I did this before, but yeah, like from there through those lows, it's like this pivot point. This is back to October of 2021. So from that pivot point and this pivot low before this big rally up to $17, this being, around 220. As we get this big move up, retest that as support. So, you can see that's a pretty notable level. And then coming back over here, that does correspond. Actually, maybe I want to fine tune this and see where we're at. I'm sure fine tuning it will not have any significant impact on what we're seeing. But if I do make this set to the high of 244 and then adjust this to the low that we see here of 230. So let's see that and 230. So it goes up just a little bit. Oh, and actually, I need to adjust this even more. I'm just going to, hopefully that's holding on to that pivot point from the back. Yep. So, okay, that's good. Locked into place. So that's what I see as being 2 key points. And let's see, and I'm going to color that yellow, make it a little bit thicker just so we can see it a little bit better. And so, yeah, both of those levels were below. This uptrend, I don't know if I drew that casually. Yeah, but I think that any wiggle room that we put on it, I think that it's tested. I had a fake out break below that level, tested really both of them over here, break above, and then it broke below. But maybe it's testing that downtrend. But yeah, now it's kind of getting into the precarious point. It also did, this move up and it kind of retested those levels kind of casually here, move up and then break below, testing it, getting rejected on the 10th with this wick up. And then now what we're seeing after this down move, maybe it's more clear on the weekly time scale. if I would switch over to that, currently looking on the daily, but this could be bear flag, bearish consolidation, really just like what we've seen over here, over here, over here, a little bit of consolidation before big down move. And so for me, this looks too risky, but maybe like it was over here, maybe this is a fake out and it is a dip buying opportunity. And so maybe let's explore this trend line. Is that's not locked into place. So I'll try to get that to the exact points. I don't know that it's going to be significant at all. The low over here, 518. So I'll just adjust that. Maybe this will shift it just enough to make it not look so bearish. And what's the other pivot point that I have? Man, where's that pivot point? Okay, right here. So I'm just going to make that the low here as well. That's 342. 42 and 518 got moved. Sorry. 518. So just going to adjust that. So there, that's both of those levels. Take a step back and see if this looks at all significant. Yeah, I mean, I think no matter what, it looks like prices below these levels, but it could always reclaim them. I'd look for a weekly close. Let's see. The next 2 days. So that would be like right around here, $1.92. I'd look for a weekly close above $1.92. If it doesn't get that, I think this is a bear flag and it's going lower. And let's see. We do have right here low. This is getting to a higher low over here because the low that we've seen is $1.81, whereas over here it's $1.78.5. And so from that, let's see. We have no divergence because we have higher low in the price as well as a higher low in the RSI. But if this does go lower, we could then start to see bullish divergence, I guess. If this does break lower than that and the RSI is higher than 1945, that was the low over here. So I just look for, if RSI gets lower than 1945, that to me would suggest that it's more bearish, because then price is also going lower, and basically like any possibility of bullish divergence is being lost. Here though, we do have higher highs formed, also higher highs formed here, so there's no bearish divergence there, but I feel like it's just potentially losing the bullish divergence. So hopefully that's helpful, but I definitely need to be getting to bed because I'm going to get like 5 hours of sleep. But thank you guys for sticking around. I'm probably not going to get timestamps on this. Actually, I'll try to do them pretty quick because I didn't have too many tickers. But yeah, thank you so much for joining. If you did enjoy this, please make sure you like it and always share your thoughts, whether in the comments down below or in the live chat. I'll be doing a live stream on Friday at 4 Power Hour, likely continuing to the after hours, because I'm really curious to see where AMC and GameStop close at in relation to Max Payne. Also happy to look at other stocks like Blink and whatnot. So come join if you want to do that. And if you can't join, I'll have the link to it out before, and just comment in the live chat on that before the stream, and I'll see it, and I'll pull up your ticker and I'll go through it even if you can't join me live. And then I, of course, will be doing Sunday night ticker request live at 9 p.m. Eastern. And then I'm just going to be trying to get out other videos. We'll always do the AMC video on Friday and just trying to catch up on them. I haven't done a cannabis stock video in a little while, so I might do one of those pretty soon. But yeah, I might have a hard time doing a video tomorrow because I might crash. But yeah, thank you so much for joining. Good luck trading tomorrow. Be safe. And just remember that with these stocks, I may be wrong, but I feel like this is just the beginning, and that these dips are opportunities designed to draw people out of the market because of fear. Got to buy the fear. When there's blood in the street, that's when we feast. And when it rips, you can do whatever you want. No judgment there. And yeah, I think that we're going to be eclipsing 1188 with AMC. I think we're going to be eclipsing 6483 with GameStop, which I think will probably hit triple digits within the next couple months. So could be a pretty crazy time. It's going to be an exciting summer.